If you've clicked on this video, you're going to learn a vital lesson on how to avoid business failure. That's right, in today's case study, we'll be talking about stakeholders and how a key stakeholder conflict led to one of the biggest corporate failures in the Indian aviation market. Before I get into the video, guys, real quick, on this channel, we make a lot of educational content, case studies such as this, and content for budding professionals pursuing ACCA, CFA, CPA, and more. If you're pursuing any of these qualifications and have any questions for us, feel free to reach out with the help of the contact information given in the video's description. Having said that, guys, let's jump into the video. So, Kingfisher Airlines was one of the key players in the Indian aviation market. They operated in the luxurious segment, which meant customers opting for their service got the best possible or the most luxurious service possible at a premium fee. In 2007, Kingfisher decided to purchase a 26% stake in Air Deccan, which then converted into a 50% stake. The difference? Air Deccan was a no-frills or a low-cost carrier, which meant they gave the bare minimum service at the lowest cost, which was to get a passenger from location A to location B. Once Kingfisher had 50% stake, they rebranded this and launched Kingfisher Red, the low-cost arm of Kingfisher Airlines. The mistake that Kingfisher made here was even the Kingfisher Red variant offered the same kind of luxurious services that Kingfisher did at a lower price point. Initially, it all went well. Customers were raving about this service, but of course, it was not sustainable. In 2011, Kingfisher abruptly cancelled 35 flights for which DCGA sought an explanation. Vijay Mallya and the company's CEO replied to this that this was a well-planned restructuring that took place. Of course, it was not accepted. A lot of the pilots, the crew was caught by surprise, and this explanation was readily discarded. So what exactly happened then? Before I get into that, let's talk about what stakeholders are. Stakeholders for any organization are the people who have any invested interest into the company. Stakeholders can be the company's employees, the company's bank, the company's suppliers, the customers, the government, the public at large, and any other group which again has any interest in what the company does. In Kingfisher's case, we can talk about the four main stakeholders which got affected: the customers, the suppliers, the employees, and the government. Talking about Kingfisher's customers, like I mentioned, the customers got the best possible service. Kingfisher had access to exclusive lounges, they had a lot of in-flight entertainment, unlimited food, and whatnot. The customers readily got discontent once flights started cancelling and the service quality started dropping. Talking about Kingfisher's suppliers. Since Kingfisher was dealing a lot of payments regularly, a few key suppliers such as a few vendors, some airports, threatened Kingfisher that if they did not settle their debts immediately, they would risk losing their credit facility. In 2011, SBI further stated that it would stop providing any financial support to Kingfisher after that calendar year ended. Airports Authority of India went ahead and further stated that it would cash in 130 crores worth of checks provided by Kingfisher to settle any partially paid debts to the public sector operators such as public airports. Talking about Kingfisher's employees, these seemed like the worst struck. In July 2011, reports started coming out that Kingfisher was not paying their employees on a timely basis. In November, the DCGA report said that as many as 24 pilots had to leave the company. Further, the crew that was facing the clients was getting irritated because the level of quality was dropping, flights were getting cancelled, and a lot of the customers were complaining. Talking about the final stakeholder, which is the government. Kingfisher approached the government for help by suggesting that the public banks should accept deferred payments for their dues. At this point, the public at large was already loathing the company, so this option was readily discarded. DCGA at this point was also considering revoking the license for Kingfisher to operate. The problems for them kept piling on as the service tax department also froze their accounts for non-payment of tax. If you take a moment to think about what we just discussed, you will notice something. Kingfisher closely paid attention to only one stakeholder, which was their customers. In the beginning, this worked out well for them as they put all their resources into serving their customers, assuming that this would work out. But this meant that they ignored all the other stakeholders, which in return started this chain of unfortunate events, causing the eventual bankruptcy of the company. So guys, this was about Kingfisher. Hope you all enjoyed this video, and please let us know your thoughts in the comments below on what would you have thought that Kingfisher could have done to save themselves from the situation and got back up and ahead. Thank you.